And finally, if you're kind of wondering how we managed to do this program for free, it's due to a number of partners of Mars, including the Government of Ontario, but also significantly, we need to thank CIBC for their generous support of Entrepreneurship 101. They've been a sponsor of ours for 5 years now, or actually 6 now, and it's been tremendous support, and we really appreciate the interest and direct involvement from both Joan Peters and Jeff Brown. So if you could please give a warm welcome of thanks for CIBC. And lastly, I'd just like to thank the team that has been here every Wednesday night since, I guess, the last Wednesday in September. I would like to thank Mars IT and Mars AV, Mars Media, who makes all our videos and makes us look really great on camera. My own team, Marielle, who you've seen here loyally every night, she does all the logistics, all the marketing for Entrepreneurship One, as well as Lily and Vijender that help with the registration desk. If you could just do a warm welcome or applause for those guys. It literally takes a small community to put this together all year, so we're really grateful to have such great help. And now I'd like to announce our lecture this evening. We're really delighted to welcome Peter Evans, who's the founder and CEO of Speakerfile. He also works with Mars as an advisor. Peter has over 20 years experience in software, internet services, online media, and telecommunications. He served as CMO in a number of early stage startups before founding his own strategy and marketing consultancy called Riverdale Partners in 2002. As part of Riverdale Partners, he has worked with many senior leadership teams with notable success, including DoubleClick, acquired by Google, and Cognivision, which was acquired by Intel. Peter, as you'll learn quite quickly from his very engaging speaking style, he's a frequent keynote speaker and panelist at technology and marketing events across North America and Europe. And most recently, Peter has founded another startup, Speakerfile, which is an expert marketplace to list, discover, and book speaking engagements around the world. It's a lot like eHarmony for experts and events. So why do we have Peter speaking here today? Well, Peter has worked with numerous with his sales and marketing expertise, he's worked with numerous clients at Mars in all 4 practices, the IT practice, clean tech, life sciences, and social innovation, and really helped and honed their pitch with a number of successes. So he'll be sharing some of the key principles tonight that give you a peek at how he works with these CEOs to create a more engaging pitch for investors. He's worked with over 60 clients here at Mars using a fairly defined pitch process, which he'll take you through a bit tonight. And he's in high demand. I got another email this week of people wanting him to help with their pitch, whether they be organizations that work with entrepreneurs or entrepreneurs themselves. Why is he in high demand? Because his process gets results. A high percentage of the clients Peter and the team here at Mars have worked with have gone on to win prizes such as TiEQuest, CIX, Canada 3.0, and the National Angel Capital Association in the US, or they've raised significant amounts of capital from notable angel investors, VC firms such as Matrix Partners and Sequoia, and Charles River Ventures. So Peter has a really deep domain knowledge in how to pitch to investors, and we are very blessed to have him share his expertise with us tonight. Welcome to Peter.
Hi, folks. Just a mic check. Are we on? We good? We're going to talk money, talk about how to raise money. Who was here last year? Anybody? Okay. Why are you here this year? Still raising? Okay, good. All right. How many people are in the room tonight are building? How many people in the room tonight are actually building a business plan right now for raising capital? Okay, show of hands. Good. How many people have raised money before, other people's money? We're going to talk a little bit about OPMing it today.
In big picture at all, or just for the startup?
Okay, just to qualify that, how many of you have raised any kind of outside money outside of your own money? Show of hands? Okay, cool. Has anybody received a term sheet that they're thinking about right now? Okay, not a lot. Okay. Those tend to be in fewer supply. We're going to talk a lot about how to get that tonight as well. So what I want to do is first of all, lead off on some principles of how we look at pitches and why we have a bit of a paradox at work between investors and between our entrepreneurs. We're going to talk tonight about what's really required in terms of getting to other people's money and allowing other people to be more comfortable with your venture. You're already extremely comfortable with your venture, confident and everything else, but the minute it changes and you raise money from other people, requires a lot of things. I love these three things that Ben Horowitz talks about at Andreessen Horowitz. It's three things that he looks for in an entrepreneur. I think it's a great mantra to start off tonight with, and the whole notion of vision, to understand where the market is going and where that venture is going to go over the long term. It's about talent. You're going to hear a lot about that tonight. Some VCs, astute investors, angels, VCs, others will tell you that in some cases talent is 100% of the equation. Sometimes you'll hear that it's 70%. All we know is that it's really, really high. And you cannot discount the team, because one of the things that we know about is talent overcomes bad markets. Talent has an understanding of when to pivot. We've heard that word a lot lately. It's become very much in vogue, sometimes overused. Can't pivot too many times. In some cases, you do 3 or 4 right-angle turns and you get back to zero. So the last one is the whole notion of money. The ability to raise money at the end of the day is very important in terms of going into a venture. So other people's money fundamentally changes everything. You're going to find that out as you do take other money. I've just come off a fundraising process that took a while, and we just raised $1 million over the course of a number of tranches. And so what's ironic is I was talking about this more as an advisor last year, at this time last year, and I've just gone into this process and come out of this process now. And I can look at it through a whole different set of lenses. It's been helpful because I put my stick back on the ice and became an entrepreneur again and raised some money. So I'm really excited to be doing this tonight, to talk to you more as an entrepreneur as well as an advisor. What are entrepreneurs trying to get to in the process when they meet with investors? They're trying to get to yes. The investor, by contrast, because it is a numbers game and there's a certain amount of scalability that they need to bring to a deal flow process, is they're trying to get to know as fast as possible. Now, I'm being flip here. I don't think there's any VC that would have sat up here last week saying that they're trying to discount everything and get it to know. But if you can't get a lot of these files to get to know, you're going to have a big problem as an investor. You've got to actually discount an awful lot of the stuff that's coming in. You can't invest in everything. The paradox is as follows. What we've got is this notion of we are trying to find somebody that's got the capacity, the funds to invest. So we want the right investor. At the same time, we're looking for compatibility. We're trying to understand the size of the investment that they invest in. We want to understand that they are at the same kind of stage that we're at. Are they super early stage? Are they mezz? Are they coming in at a later stage when some of the risk has been taken out of the venture? And then what geographies do they actually invest in? What we also want to understand is whether or not they've got a portfolio that matches the kind of investment that we're bringing into them. Are they strategic? You'll hear that word a lot. A strategic investor is somebody that can give you an awful lot more than cash and can help you with market introductions, insight into the market, and also talent acquisition, which is a big part of what you'll see in the top VCs. They are talent networks at the end of the day, not just sources of capital. Are they friendly? It's something that you've got to assess. Do they have directly competitive investments? I don't think there's many VCs that would knowingly go into a meeting and conduct, closed-door sessions with an entrepreneur to get some key facts out of them that would be to their detriment. But it is something you've got to look up. And something that some of the VCs said on the panel last week was that you've got to do your homework and really understand how that portfolio that they've already invested in complements the investment that they make in you. They are talent agents. They already know the customers in some cases that they want to approach with your product if they invest in you. So it's important to do that homework. And do they have a successful track record? Success in this market begets success. It's no secret, and it's unfortunate for first-time entrepreneurs that haven't had an exit, that it is very much a game of exits and reputation, both on the investor side and on the entrepreneur side. We want to back winners that have had an investment before, that have actually raised money before, that have sold companies before. At the same time, you should be looking for an investor that has some sort of track record, ideally. At the same time, investors are looking for team. First and foremost, in my view, it's the biggest factor. It's 70, 80% of the equation, if we could even put a mathematical score on it. They're looking for skills, they're looking for track record. At the same time, they want a market that is big, that is addressable. We're going to talk a little bit about the total addressable market, not just the whole market that you may have divided a couple of percentage points in and called it an opportunity. At the same time, we want to talk about the business model as well as the IP. And we're finding that there's a trend towards less focus on IP and more about fast agility execution. If you've got to pivot 3 or 4 times potentially over 5 years, some of that original IP that you're filing provisionals on right now may not count for all that much. But again, it depends. If you're doing a consumer app, IP might not be as fast or as important as speed. If you're doing something that's in life sciences or healthcare or something, obviously it takes on a different level of importance. Traction is important. Many investors, smart investors, will not do anything with you in terms of moving money into your company until you can show demonstrated traction. There's different ways of showing traction. There's actual signed deals, there's actually LOIs, there's letters of intent, there's expressions of interest. If you build this, we promise we're going to come in. There's ways to build proxies to show investors that you're building some degree of traction. And building those out are helpful. Something I did personally with Speakerfile, we went out with a dirty iPad prototype and asked a lot of people, would you buy if we built it? And we built on the specs that we got back from the market, which I think was key in our funding. And lastly, the platform. Do you have some significant technological advantage, which again, like the IP discussion, is important because it speaks to the kind of sector that you're in. Technology is very important in certain sectors and always will be. So, but I think one of the things that we're really finding out right now is that technology is far less important in so many markets. Technology's almost gone to zero in favor of speed and usability and other factors that we're seeing. So let's get started. We're going to talk a little bit about getting to yes in the context of 3 levels of engagement that we are trying to get an investor to click on. It's the trifecta, as I like to call it. We've got them emotionally, rationally, and financially. How do you do that? Well, getting those 3 levels done, there's some principles that I like to use with clients that I think are very important with respect to how you think about a pitch. I don't just do somebody's colors. I don't just make it look pretty. I don't do pretty pictures. I don't do pretty diagrams. They all have to make sense. They all have to fit together in some way. But at the end of the day, we are storytellers. You are selling when you're selling to investors, when you're selling to customers. An investor, if they're smart, are looking at you and saying, can I invest in this person? And if they can actually move the market and get people to buy their product, if they're good sellers, good salespeople, there's a better chance they're going to invest in you. You have to create a well-paced, logical narrative. You have to think storyboard, the way a movie unfolds. There's certain scenes that don't fit. Little Red Riding Hood does not get attacked by the big bad wolf in the forest before you see the scene of her happy going about her day, going to grandma's house. It's very important that we get the sequence of slides and the information right for the investor. And to keep them actually engaged, we want to do things like Disneyfication. What I mean by Disneyfication, it's a phrase I borrowed from my friend Dave Gray at Explain, now Dacus Group. He uses visuals, one of the original originators of the infographics movement. And visuals are very important. Frameworks, graphics, images. We have to use them where they make sense. I've seen a number of entrepreneurs that think they're doing a TED Talk and they want the big graphical images and they think they're Steve Jobs, and there's really not enough on the slide to really give me context about what it is you do. You got to personify. The third point I'd like to make is that these are people you're pitching to. They have the same kind of problems that the customer has, and you have to treat them like human beings. I know that's hard. VCs, human beings, they are. Little dig there. No, they're great. Know many personally. So you want to relate to their personal experiences. They're in the people business as well. Again, the importance of team. And you got to simplify. I think it's really important that you understand the goal of this process is to get to the next meeting. It's not to get the term sheet. Very important. And lastly, it's about verification. Somebody once told me it's a good idea to have that imaginary person on your shoulder, that little gremlin that says, as evidenced by. Those 3 words. How can you connect the things that you're saying about your business to an investor with those 3 words? As evidenced by the fact that I ran a prototype, the fact that I went to 5 trade shows, and I got this amount of interest, and so on and so on. Very important that you've got some market research and some key metrics to support things. So we're going to run through the components of an investor pitch tonight, and we're going to keep it very simple to just 4 components that I think you'd be smart to look at with respect to a 12-minute pitch. And we're going to talk about that specifically as a format. The reason we're going to talk about 12 is because we can't really talk about a 20 or a 30. And in fact, I wouldn't recommend to anybody that they develop a 30-minute pitch because you can put people to sleep. But I want to really point out a couple of disclaimers here. I am but a disciple of this whole movement of the perfect pitch. I think all of us are striving to do a perfect pitch with each CEO. Every CEO is different. Every company is different. Every market's different. Every investor that you see is different. They're all going to want to see different things. It is not for me to sit up here and say, if you do this, you will get money. That's the first disclaimer. It is not up to me to say that if you do this, you'll get any interest at all. And in fact, I think it was well said on the panel last week that a no doesn't mean no from the market. You got to shop it. There's a lot of great investors over time at some of the top VC firms that will actively joke publicly about the crazy things that they missed out on. Things like Instagram. Call it crazy, $1 billion. But you know, so you can't really falter on just one or two meetings. This is important because, again, they're people, they're personalities, they're attuned to different things. What we've got to focus on then is at least some sort of a framework for what we call a 12-minute pitch that we use internally at Mars for our angel meetings. And before we put investors into that process, we actually break them down in about four areas. The first of all, are you solving a real problem? Does it exist? We talk about points of pain in this. Are you addressing an attractive market? Is the second question. And the third one that's very important, sometimes called an unfair advantage for some reasons. Why you? Why do you have a unique advantage with respect to rolling this market out? I'll give you an example. I mean, with Speakerfile, I had been on association boards and had a huge problem trying to recruit industry speakers. At the same time, I've been a keynote speaker. I've been paid to speak by speaker bureaus, and I've been an industry speaker for years. And I've also paid PR agencies $500,000 to get on 40 podiums throughout the whole year for my company, for all the VPs to appear, which was probably the smartest investment that we ever made. So I've also ran trade shows. I've been an investor in trade shows. I've produced them. I've done technology events at Mars, healthcare events. When you get through all that experience, there's not many people that have been crazy enough to do all those different things. I've had a lot of people say to me, you have a really unique set of experiences and skills that give you an opportunity to decode what all the different people in this ecosystem that you're putting together. Because this is a very hard problem we're trying to solve, which is essentially creating systemic change in a whole marketplace. This is very, very important. If you do not have unique advantage, you've got to look for sources of unique advantage. We're going to talk about that tonight. Things like advisory boards. Big problem when we don't see outside advisors helping a young entrepreneur that doesn't know enough about the market space they're getting into. And lastly, it is about an investment that they're making. The investor is owed a financial return on that investment. It's got to be compelling at the end of the day. As somebody has said many times, Sean Wise does a nice job of this, talking to the investor's sense of greed. You have to appeal to their sense of greed. Investors, by nature, if they're not greedy in some way and pulling for you, that's a bad thing because they have to be. They have to be going for greed on every deal because some deals aren't going to make it. It's called a portfolio game. We're going to talk about how you pace the pitch, and we're going to talk about selling your story in 12 minutes. Again, that word sales is going to come up quite a bit. But again, it has to have substance. It can't be flash. As you start your pitch, I'm going to arbitrarily set some time frames. These are, mileage may vary here, as they say on the commercials. This is really important. I don't want somebody coming out of here going, well, Evans told me that the real problem has to be 3 minutes. I've only got a minute and a half, so I'm just gonna recite Shakespeare for the other half or something. I mean, you might as well be. Go with the flow in terms of what you think is right. These are guidelines. I'm going to disclaim all this stuff up front. The real problem is about 3 minutes. Secondly, the attractive marketplace and building the business case for the market problem that you're solving. That's really got to be played out. It's really the meat in the sandwich at the end of the day. And the unique advantage is important as well, as we just talked about. It's probably about 3 minutes, the slides that I'm going to show you tonight, as part of 12. And lastly, that compelling investment at the end. You've got to close with some financials which give them a sense of what their return is going to be as an investor. So let's answer the so what. Let's get first into focusing on the problem that matters. Have anybody heard that phrase, or has anybody experienced this, show of hands, with an investor that goes, it sounds a bit more like vitamins than it does aspirin? Anybody familiar with that phrase? What's one used for? Pain. One's used for pain and the other one's used for health and wellness and stuff. And we don't, if we run out of vitamins, we don't panic and run to Shoppers Drug Mart. We do if we have a headache. So I think what's important here is that we want to be solving a real problem where there's a perception, or at least you can move the market to believe that they absolutely need this. Not a nice to have, absolutely important. Creating impact is about a number of things. And what I'm going to do tonight is I'm going to show you some of the dynamics of how you get these points across to an investor, but even better, we're going to show you examples of deals that have raised money, some big money, nice money, from companies like Charles River Ventures. We're going to talk a bit about Wave Accounting tonight. We're going to look at Virold, and we're also going to look at QDT, which won the Angel Deal of the Year in the US the other year. So what we want to look at is this notion of the company and its significance, its solution, what it's actually built in terms of a core value proposition. You need to get it across in one sentence. This is really important to create some impact. What is Speakerfile? As an example, Speakerfile has built an online marketplace for events and experts. We better connect those two parties together, especially industry experts. And the quick elevator pitch, because I had 5 minutes to say it on TV the other day, Speakerfile is the eHarmony for experts and events. Nice and simple. And I can tell you it's worked with hundreds of people, hundreds, across every single type of persona. It just seems to work. So we're going with it. It's a metaphor. That unique benefit, you've got to focus on the big idea, but also on that one unique benefit that you really have built. We built a connection and booking engine that actually drives transactions for those people. At the same time, those metaphors, as I talked about, you've got to come up with those. It's like a movie pitch, It's like Star Wars meets Buffy the Vampire Slayer, and the other producer goes, oh yeah, I know what you mean. That sounds good. It would sell. This is really important that this X meets Y thing is brought together metaphorically. And lastly, how can you be provocative? How can you actually create an emotional, visceral response to the pain points that you're bringing forth? And I'll show you some examples of how we actually do that in a second. We've got to paint a picture of who has the pain. We've got to look at the current state. What's the insanity that you're trying to solve for right now? What's the big issue? What's the historical evolution that's happened? Is there sort of some things that we had to walk through in terms of doors to get to where we are now? One of the things that you might find is that your solution needed cloud computing to really operate properly with the kind of economics that you need to support your venture. That's a good example where you can talk about some of the things that have fallen into place, because you will often get the question, why hasn't this been done before? And it's a killer if you can't answer that. Because often things have been done before, and if they haven't been, it doesn't look good for you if you can't answer that properly. The personas. If you don't know what a persona is, you must look this up. Wikipedia, just Google it. Look at personas. These are the essential characteristics of the buying group. What makes them tick? What they do during an average day. A day in the life is how you map a persona. And lastly, in the problem, I like to use pictures. I like to paint a vivid picture of the point of pain if you can somehow bring it to life. It's very important. Every picture tells a story. At the end of the day, we are solving real pain, not the nice-to-haves. That is the key message of what we're trying to get across in this. And lastly, we're going to move in after we've talked about pain, and we've got the investor emotionally and subliminally at a point where they're like, my God, we got to get pitchforks and torches right now and get into the streets and solve this. Help me, entrepreneur. That's what we want. I mean, flip, but that's kind of the reaction we're going for. The product, what is it? Show me a screenshot. I'm going to scream the next time I have to speak to a CEO who's got an amazing mobile solution that doesn't want to bring an iPad into a ballroom when they're presenting and show the product. This has been done by TV, Home Shopping Network, I call it. Show the product. Make sure that if you have a demo that you're not being shy and leaving it in the briefcase. This next one I'm going to show you, we had to get the CEO to start showing the product more and get her comfortable with that because she had something to show. Functionality, the who and the do. Who's in the scene? What are they doing? A day in the life, before and after, that's important. Pain and gain. Those are the two states that you can show through slides. And lastly, that high-level value, the benefits. The category that you play in is important to talk about as well. So words that define that category. Are you a content management system? Are you in cloud computing? Are you in the HR space? That sort of thing. And what's the readiness of the solution? It's important to get that across. Do not misrepresent where you are. If you are calling it a beta and it hasn't even been built yet and it's still just operating as a bunch of JavaScript on the back end and the customer can't really load it, be upfront and honest. They will get to that very quickly and you'll be found out. And it's just misrepresentation is not good in terms of the stage that you're at. What you want them to understand is that your solution is novel, it's easy to understand. As well, what you want to understand is what's been achieved to date. The investor needs to know that. So some of the things that you want to get into this whole notion of real problem, you want to talk about traction. You want to focus on the real things that you've done so far that give the investor a sense of what you've accomplished on the money that you've spent, because they're going to kind of do a little bit of math on that as well. The year you were founded, your employees in terms of full-time, part-time, if you've got multiple offices or locations. For instance, we've got a location in New York that we kind of hotel and general assembly down there. It's something that's important because a lot of our customers will be there in the PR space. And product releases. Have you done more than one product release? Do you have beta users? Well, how many unique views have you got? Registrations. Not all of this stuff needs to be on these front slides, but these are things that you can use to give the investor some sense of traction. Paying customers, can't get any better than that. Partners in terms of technology or channel partners that you're in negotiations with, talk about where you may be with some of those people and the kind of interest that they've had. Certifications, industry awards that you may have won. Hopefully nothing too flaky. You might want to be careful about how you tout some of that stuff if it's not significant. Media coverage if you've had any, and obviously where you are with your patents. If you filed a provisional or if you've done a substantial amount of work on IP, I think that's important. What you're trying to get across here is that your team is committed and that it can execute. Remember those three words? What does the gremlin say? As evidenced by these things up here. And not you're just going to pick from this buffet table of elements here, not all of these things. If you've got all these things firing, you're probably in very good shape. But be careful how much overload you get into. What we're going to talk about now is a company called Quantum Dental. Q2T came to us and we were working through a really nice process here with the CEO, with Lisa Crossley, who had raised a lot of money before. She's a very accomplished CEO. And we were just trying to get the pitch down. And what we really found we were lacking was, how do we get across the fact that we're trying to solve a big problem in dentistry and that things haven't moved in a long time? And there was a few things that I keyed off of with her to say, we need a couple of really vivid photos to talk about the point of pain and the problem. Does this actually get the point across? I can still do the pitch. That's what I love about these things. If they're simple enough, anybody can do them. The problem is that existing tooth decay diagnostics like x-rays only work half the time. In fact, if you look at this carefully, it's less than half the time. You probably didn't know that as a patient. Some of you are going into the dentist's office every year and getting x-rays. Those standard detection methods, both visual and x-ray, do not work enough. I love the way Lisa says, and if you get a dentist out for beers, they'll admit that to you. Okay, that's kind of neat, because now we're talking about beers and a pitch, and we're people. Again, investors are people. At the end of the day, what we've got is a problem that has remained fundamentally unchanged for decades. And we just happened to find a picture of an old dentist chair with a girl on it. And she actually looks almost like the same girl, 40 years later. And when you think about it, the original x-ray equipment does go back that far. Does that conjure up an emotional, visceral response for you as an investor? If I've got something that can actually fix that problem, is that potentially big for all of us? It is. Because at this point now, we wheel in the solution. And that's why we invented the Canary system. It's interactive software and printed patient reports. Show the product. That's what she does. Hardware. She's got it to show, so she does that. At this point, you can pretty much understand that it's a low-light laser here, and it's got software that accompanies it, and it is a full system to be used in the dentist's office. And then next she goes on to say, well, now that I've told you a bit about quantum, she does a little bit more on the product itself, but gets out of that in about 30, 40 seconds, just enough to know that she's got something really substantial. She then needs to set what I call the snapshot slide. This is the most important slide in the entire deck. Some people will tell you the financials are important as well. They are. But it's important at the front end of this deck to sustain investor interest. This is what I call to put both of your BlackBerry and your iPhone down and listen up to what I have to say for the rest of the presentation. Executive summaries work because they actually front-end load all the information that busy, impatient people need to see within just seconds. It's the blink test that Gladwell talks about. What we then do after this slide is we successively and logically unpack every one of these points in the successive slides. This is killer. It works every time. Every time. I have insisted on this slide being in every single deck because people are impatient. They don't have time to learn anymore. At the end of this slide, I can opt in or opt out as an investor. I basically, I'm interested or I'm not. As they say on Dragon's Den, I'm out. That's okay. They can think about, they've got to get the dog to the vet and all those other things that are going on in their head that are competing with your pitch. But you've got to sustain energy and interest. What they talk about here is what Quantum does. They've developed, and this is a nice elevator pitch, a new platform that uses a low-powered laser to detect tooth decay earlier, more accurately than conventional technologies, okay? So it's better than anything out there, allowing dentists to treat and heal the tooth instead of the standard model which in the dentistry industry is referred to as drill, fill, and bill. What's interesting then is she goes on to milestones, and this is how you do this in under 50 seconds, typically. We have product today, here it is. We have customers with 50 pre-orders signed. We have a strong patent portfolio with patents that have been filed. We have clinical trials underway with Health Canada, and we have partnerships with global distributors and strategic partners, a number who have expressed a lot of interest in the company, if you know what I mean. And the financing, why are we here in the meeting? You should state that in the summary slide. Now that you know what point of pain I'm solving, what I'm bringing to the party, this is why we're here. And you can look at the numbers in terms of what they were looking to raise. 2.5 million to reach break even on 3.3 that had already been raised to date, and what the use of the funds is at a high level. Typically, a lot of the funds are used for sales and marketing at this stage to build out global distribution. The market problem that they're solving next is actually looking at things from the dentist's point of view and the patient's point of view on both sides. A nice framework here, and in the center, the limitations of the current models that are out there in terms of technology. It's a great way to frame it. By the way, I want to state all of these slides are found on the portal. They'll be uploaded. And all of these CEOs have been very gracious in sharing, real live pitches to benefit the community. I think that's great. We often use, live stuff to train people on because I hate generic frameworks. The minute a CEO can look at another deck, the lights go on. They go, oh, I know, I got all that information. I just need to lay it up in that manner. This is going to help a lot. It's just very gratifying to see that. So hats off to the CEOs that share this stuff. And then the value proposition, the value to the dentist. Attract new patients, more patient visits, reduce costs, and it's affordable. They have leasing options for this equipment. The value to the patients and insurers is clear as well because you're going to reduce costly and painful restorations. It's important that you look at all angles of this. Who's paying for this dentistry? If it's an HMO in the States, or if it's OHIP here, or if it's a healthcare plan that you've got, they've got to be on board as well if you're trying to create systemic change in a marketplace. Think about it from a persona perspective and the different players in that ecosystem. It's important then that Lisa go in and unpack what this is because she hasn't done enough on product. She inoculated everybody to what she's got. We think we know what she's got, which is a low-powered laser, but then she goes into more at a feature level very, very quickly by showing the product off and actually picking apart some of the actual features that it has and how it would be used. There's two parts to this product, and that's what makes it interesting, is that there's a software component as well. So she shows what goes on in the dentist's office from a software perspective as well. And lastly, she needs to show at this point how the standard drill, fill, and bill model is changed by remineralization therapy, because part of the business model for QDT is actually selling remineralization, toothpaste and things like that through various channel partners and actually getting at tooth decay in a very different way. This is really important. So what they showed was how they interrupt that standard cycle of drill, fill, and bill. This is really important that you, in some cases, if you have a very complex solution, that you draw the landscape out and show how you change things in a before and after. We call it the pain, we call it the gain, we call it a day in the life, we call it a who-do. So it's the notion of who's in the scene and what are they doing. You might want to draw some stick diagrams and work out some of that because it's really important if you're not getting the message across. Number two, let's go to attractive market. Opportunity awaits is what we want to get across to the investor. That there's lots of room in the market to scale the business. There's room for potentially more competitors because you're going to get asked that. You should never assume that you're going to be the only one in the party. I hope I have competitors because I'm playing in a billion-dollar market space with Speakerfile. So I would welcome competitors on the track with me to evangelize because we can build the market together. That's the kind of confident approach you should have as an entrepreneur. You've got to look at sizable market opportunity. You've got to say that it's very big and that you can get to it. Size matters. What's being spent today on the problem, you've got to look at it from a ground up. You can't just go and say, listen, I think it's $10 billion that's being spent, and if we could just get 2% of the market, I'm sure you've heard that before, not the way to go. You'll get thrown out of the room and discounted at that point, or at least metaphorically thrown out the room. Your numbers won't add up. Can the market support multiple players? We talked about, is it addressable? Can you get to a lot of that market with the product that you've got? What sort of trends are happening? I'd like you to write this down because it's helpful if you're thinking about trends. PESTLEC, P-E-S-T-L-E-C. So we're looking at political, economic, social, technology trends, legal trends, environmental trends, and I'm forgetting the last one, which is C. I'm having a senior's moment. I'll come back to it later. I've only done that a million times. But PESTLEC's good because it gives you a series of filters that you can actually go through. What's that? It's cultural, thank you. Thank you for that. And so those formative forces, in terms of what's getting worse and what's getting better, what's coming into view. I think what's really driving us at Speakerfile as a good example is social media. Everybody wants to be a thought leader these days and wants to be out there and speaking on the podium. There's good ROI on that. So that's a really big trend right now is that notion to personal representation and brand management, personal brand management. You've got to do charts. You've got to keep it engaging. You've got to keep it visual. I'm going to show you some stuff here. The segments, are you going to start niche or are you going to go broad? Are you going to go global? This is really important. In some ways, we don't want to go to the States first. Maybe we want to build our reference customers in Canada. How are you going to actually stage the growth of your company? Using third-party reports is important in some cases. Less so for companies that have got something the analysts aren't writing about, so the Gartners of the world and such. You may be so disruptive that they haven't written a report about it in a new category. And are you using primary research to gain certain amounts of insight? Are you doing your own research and studies on the market? So what you want to really say is that you have a unique insight into the market and that you've got buyers who must have your solution. At this point, this is where we talk about the status of the venture, how many people are closed, have you got key segments that you're going after, why are they buying? This whole notion of adding logos to your slides to show the kind of people that you're playing with. It's a nice visual way to go, but organize them into categories. So we've just landed a couple of customers, and to prove that we have a product that is applicable to media, we've landed TVO. We've landed Baycrest Hospital in the healthcare segment. In the consulting segment, we've got KPMG and Deloitte. Don't just put the logos up. We call it logo soup because you're forcing the investor to figure out what is her strategy when she's going out and selling. It's really important. And lastly, this whole notion of customer quotes to validate the market pain and size. If they're used properly, they're gold. If you've got a really good reference customer that wants to talk about it. Making money, where does the money come from? How do you make a profit? You've got to look at key metrics. We're looking at things like pricing, your average deal size, your registrations, your subscription. What sort of estimated churn can you talk to? Again, a lot of this stuff doesn't have to go into the 12-minute pitch, but you have to be able to talk to it at Q&A. Some of the most important metrics that are overlooked, and you'll see that guys like David Skok, one of my favorite VCs, who's a real theorist and somebody that studies the the entrepreneur and how they acquire customers, especially in consumer markets, he's brilliant. He looks at cost to acquire. If your cost to acquire a customer is higher than what you're charging, you're going to be out of business over the long run. You're just going to run out of cash. So this whole notion of, have you really thought through what that SEO strategy is going to yield for you, your advertising strategy? It's one of the most overlooked metrics that entrepreneurs get stuck on in many cases. What are you going to do with channels? Are you going to sell and service customers on your own as a direct sales force? Or are you going to use channel partners to scale? Are you going to syndicate through stores like Apple and such if you're doing something in the mobile space? Very helpful. And is it sustainable, the competition that you've forecasted, or is it going to intensify? What could potential people do to you if they see that you're having a really good party with your software or whatever your invention is? What we're trying to get across here is that we validated the revenue model. We can demonstrate how it'll allow us to scale the business. We talked about acquiring customers. This is really important because it is, at the end of the day, the most visible proof that you've got a real investable business. So we're looking for visibility. It's critical to success. What is your unique story that you can actually show to people? And lead generation programs. This is really important that you talk about how you will generate leads, customer leads, as well as your sales model that we talked about. The systems, be prepared to talk about sales systems. How many people have Salesforce.com implemented? There's a few of you already. It's very simple to do, and you need to start looking at those systems if you're going to track sales people and customers. It's important that you also look at the operations of how it's going to come together, not just things like Google AdSense and analytics and such. Looking at all of those different operational systems are important. Do you have the ability at various stages of the company to pivot through the growth stages and through maturity? And can you actually go into other markets? This is an important question that good investors will say. What if that stalls? What's your plan B? What if we take all of those revenue projections and we cut them in half? What do you do? These are important questions that good investors will ask. Okay, so we're going to talk about one company. How many people have heard of this? Well, this is great. Kirk Simpson, Captain Kirk, is doing his job beautifully. This company's on fire in the right way right now. Wave, since their OMERS investment, and now Charles River, I think, did a $5 million A round in Wave. We worked with Kirk and the team in very early days when Wave was just going through its initial launch. And I'm happy to say, they've really killed it out there. They've done such a great job. And this is how they answered some of the questions that we talked about just earlier. Market opportunity. They're talking about the trends that they're riding, the explosion in SaaS, paper to digital, the wireless revolution. Everything's going to mobile, and collaborative consumption. This whole notion of a free agent nation that needs a free accounting solution and needs to be able to purchase things at a discount through Wave and through all the partnerships that they're actually building. Very novel idea, giving away free accounting software that you can actually run on your phone. The ability to scan receipts and actually upload them to the platform while you're waiting in a doctor's office doing your taxes, or at least an element of that, your bookkeeping, making it accessible to the masses and simple. This is what Wave's doing a great job of it. What they talked about, too, to really frame the market that they're in, they looked at Mint as metaphors for success and FreshBooks, with Mike McDermott blazing a trail before that. At the time that Wave was going out, Mike McDermott, another Mars client from way back, had 2 million plus users. And these guys actually have had exits like Mint already. Very substantial, just to give the investors a sense of the category that they're playing in. And then the revenue model, targeted offers and research that they're actually putting in there. Really talking a lot about how they're going to be able to gather some very important data on users and actually work with channel partners to sell services into that large and growing base of customers. Really important, showing the product. What I liked as well about the Wave pitch was that they also showed a 60-second demo. And it was so beautifully voiced over by the CEO, Kirk Simpson, that it was perfect in the demo. I don't like people to run video in a pitch because you lose the audience. All of a sudden, the machine takes over. But he narrated it himself and just showed you and walked you through the product. Fly-throughs, if they're done well, are extremely helpful because they get a better sense of what's going on. The revenue model was premium products and tax returns. And their go-to-market strategy, which was important, there was a launch date fixed in people's minds where they would capture PR through social media, partnerships, advertising, and they at the same time would retain customers through a number of factors here. This is important because you also want to talk about your customer retention strategy if you can, if it's germane to the presentation. So let's get to number 3, unique advantage. You're in the position to win. Many of the essential pieces are in place, is what you want to get through to investors. You want to look at partners. How do you punch above your weight? It's through partnerships often. It's really important. If you look at what Wave Accounting is doing, one of the ways they're killing it is they've got their app inside the Chrome store. That's a partnership. Very important syndication and distribution. So what will you be doing in terms of, docking with people that have got a lot of market coerciveness out there? So what role will they play in your research, your development, your sales and support? Think about through the whole value chain where partners can add value. Do you have any executive sponsorship? Do you have buy-in from those key people inside the channels? That's important because you can sign channel partnerships, but a good investor will say, are these just logos on your website, or do they really mean something? Do you have the executives engaged? This is very important. So they need to buy into your vision, and you need to show that they're going to work with you. The technology and IP I've talked about a fair amount, but I think it's important that you not only talk about the degree of leverage that you're going to get through technology, you also need to understand and explain very nicely the kind of IP that you may have developed, if it's process-oriented or if it's core IP related to technology. And are there any third-party components in your technology that you may have licensed? Open source is a big issue as well that may come up as well. If there's certain files in your software that have been aggregated through open source channels, it can be an issue later if you're passing yourself off as having unique IP. And then in terms of patents, I think it's becoming less important for some investors. I talked about the speed issue, but I think it's important in many cases to do some preliminary research without spending too much money if budget is an issue. And the thing about the provisional to understand is obviously, and we've talked about this in other lectures, that you're buying some time if you file that provisional as you start to evolve the business. The team and advisors is one of the most important areas. You've got to show company background. The planned hires, speak to where you want to go with that. It'll be a key question. The kind of achievements that you've had. At the end of the day, you want to really understand, the investor wants to know that you have the know-how and you have the know-who. You have really good market connections, not just competence in a certain area, and you can get to the people in the marketplace that are going to buy your technology. So one of the things I want to go through here is a really quick example of Rolled that actually raised some really good money after this process as well. And this is how they laid out their competitors. Now you can do 2x2 matrices here. This is fairly simple to just show, and again, although it looks self-serving to show all the boxes, that's typically what entrepreneurs are working on. These are the variables that you consider to be really important in the competitive landscape versus other competitors. There's many examples of these that you'll find out there in pitches. Your IP portfolio. What I think is important about this is if you're in life sciences or you're doing medical devices or you're doing some sort of area that is very important from an IP perspective, that you do split it up. What is the IP that Verold brought to the party, and where did they license third-party IP? This is very important. It's fully disclosive, and it's very authentic and honest for the investor. They like to see it. It's very professional. And lastly, this is about the amount of detail, the maximum amount of detail that you should be doing on the team. The position that they're playing, their name, and their background. It's important. Where they've worked before is important. Any exits that they've had, if those companies exited or went public. Really focusing on accomplishments, not too much on the advisory board. Just very, very simple information. You don't have to list your accountant, your bookkeeper, your lawyer. I've seen a lot of that where young entrepreneurs are trying to load the slide up, and it's unnecessary. Number 4, compelling investment. So presenting the offer, there has to be upside for investors. So as we get to that final chapter, what we're trying to do is really give people the key numbers. How will you make money? What's your burn rate? You will be asked, how much cash do you have? How many months of cash is typically how we measure that? And what is the net amount of cash that we really need to overcome through new sales and stuff? Remember one thing, sales are always going to be the cheapest form of financing for you. So that's one thing that the investor is very attuned to as well. They want to see those sales kicking in as fast as possible. Be prepared to defend your assumptions and the scenarios that I talked about before that, what happens if there's a lack of conversion from free to premium? You've talked about a freemium model, but what is going to happen? How will you make money? This won't be an Instagram situation for many of us. So at the end of the day, it will be about making money. That cost of acquisition of the customer is going to be very important. And then the ask, the investment structure and terms. Is it a debt financing? Is it convertible debt? Is it equity? What are the terms of the deal? What will you use the money for? We call that the use of proceeds. Often, at a certain level, you'll move from developing the technology at a very early sort of friends and family founder stage to an angel round that might be to really kick in your first marketing and sales resources. What kind of runway will the actual investment buy? This is very important. An investor, as I think you heard on the panel last week, doesn't want to fund you with $500,000 like the IAF fund and find out that there's really $1.5 million that's required. We're short. And now we're going back to the well with a half-finished product or a product that's ready to go and we haven't really been able to test it and market with some marketing and sales resources. You need to talk about, what you've got raised already. Many investors will say, do you have a lead investor secured? Some investors will even use that as a good excuse. Call me when you have a lead. I don't think I want to lead. I think I want to follow. I might be interested if you can get a strategic involved in this that knows the market better than me. I might come in on that. There's safety in numbers. There's a herd mentality to almost everything in life. Investment is no different. Valuation is important. If you are presenting in a crowded room, do not get into valuation discussions on the podium. It's a rookie move to do that. There is no upside. There is nothing to be gained by starting to talk about valuations. The best way to do that is to duck it and just say, listen, I'd be happy to discuss that offline with you and take you through some more of my numbers and assumptions before we get to that and your qualifying interest through that. And it shows that you're mature if you can actually do that. Some investors will deliberately bait you to see if you take that. And it's not a good sign if you do and engage in that. So watch premature valuation. At the end of the day, what you're really trying to do is say that the structure of the investment that we are proposing and the terms that we are offering you as an investor should really meet your criteria. Lastly, those financial projections, very simple in an investor deck. I'm not big on the big graphs where I have to actually look at the number of subscribers and then I have to eyeball where your revenues are. And you've got the colors longitudinally, and it's a thing of beauty. I had to correct the CEO today on this and say, just give it to me in a flat file format because I can look at this a little bit better. There's a lot of debate on whether it needs to be 3 years or 4 years or 5 years. Many people don't have a crystal ball that give them 5 years, but there should generally be 3 years of projections. If you're in tech, often you can't get a hockey stick in 2, okay? And do you need a hockey stick? Some people will say, you know what, I can appreciate you've tried to build a hockey stick, I don't buy it, but I think it's a great family business, or I think it's a great profitable business that will spin cash, but I don't completely believe your numbers. But I think it's important to really show at least 3 years. In this case, I'm just showing you what 5 would look like. Number of licenses, as well as your revenue, expense, and your gross margins, what you're taking home from an EBITDA perspective. I think it's important to show your full-time headcount. Factor in your contractors too if you want. And I think it's really important to just show the size of the human resources requirements that you've got. And then at the end, we close with that investment to date. How much have we raised from government sources? If we've got IRAP in there, or we've got FedDev. In the case of what you may have brought in from founders and angels, you've got to be honest and say how much is in. Don't count sweat. Unfortunately, investors are going to be smart and not value that. They will, but not for financial purposes. The current raise and then the use of funds. And some of the examples will be to build out sales and marketing, secure more patents. Maybe we've got to build a small manufacturing facility or do assembly of the product. Regulatory approvals. You might need to hire some salespeople in other regions, that sort of stuff. And at the end, I think what you want to do is speak to what's going to happen in terms of further fundraising. It's important that if this cash that you're raising gets you to profitability, that you can speak intelligently to if something goes wrong by 25 points, does that completely affect our need to raise more money? And where will we be? Because I've seen some investors do some really, really good analysis on this, just some basic analysis that concludes that you're going into a funding round in November. Is that a good thing at Christmas? Is it good to raise money in July? I raised money last summer, trust me. When people are going to the Muskokas, not smart. I'll never do it again. And we thought it was, it's a small amount of money. But there's a seasonal aspect as well to fundraising that you want to start thinking about from a timing perspective when you overlay this in here. So the recap, let's go into the 4 components of the pitch. Real problem, what's the next one? Attractive market, unique advantage, compelling investment. The things I want to close with is, I want to give you, I even threw, should say 11 here because I added an 11th last night. I realized that I'd missed one. This is what I believe you've got to bring to the party at the end of the day for any good investor. You've got to bring honesty, straight answers. You've got to answer questions honestly. You've got to be credible in terms of the insight and thought leadership that you've got into the market that you're trying to serve. You've got to show resourcefulness, that you've gone a long way on a little bit of cash is a great way to make an impression on an investor. You've got to show some logic, that you're pragmatic, that you can make decisions quickly. The drive, I look for passion when I look at an entrepreneur. That notion of loving early stage and understanding what it means and the hard hours that you've got to have, that ability to excite other people is important as well. The humility. We look for coachability in the CEOs that we work with. If a CEO is not coachable, investors are also going to pick up on that. They're not going to invest. They want people that take constructive criticism. Leadership is very important. We talk a lot about it, but it's the ability to attract, in my view, and lead a winning team. It's not just enough to be a talent, a magnet, but you've got to also lead them as well. And it's a hard part that we struggle with as young entrepreneurs. Often we lack those leadership skills and we're thrust into being a CEO, at least for that formative period in the startup. Critical thinking is really important. It's that whole notion of, challenging your own assumptions. That's what good CEOs do. They're always worried. I'm always worried because I can actually have enough visibility into what could go wrong. You don't want everybody in your company running around worried, but you are paid as a CEO, or not paid in my case, very well, to worry for the company. And in the area of commitment, there's the old game of ham and egging. When you're making breakfast with ham and eggs, they often say that the chicken's involved, the pig is committed. This is important. You got to show involvement, but no, commitment. Skin in the game. I've got money in this. I've got personal money into this. They want to see that, and they want to hear about that, and they want to hear the stories. In some cases, investors will go so far as to say, I want to know that that person will feel pain. When a great entrepreneur that we have at Mars says that if this didn't go right, it would have been really painful because they'd actually maxed out on credit cards. That's skin in the game. Patience. When I worked at Bell Canada, they used to say if you were in management there, you needed tolerance to ambiguity. Because God knows when I worked there, Bell was a very ambiguous place. But I love that phrase, tolerance to ambiguity, how you can deal with all the change and the fact that everything isn't laid out. There's no sort of roadmap for what you're doing because a lot of you are disruptors. And lastly, I would say this is probably one of the most important, if I had to pick one, it's the whole notion of agility. You have to be decisive. You will fail. At so many different things, you have to understand when to cut your losses. Kenny Rogers, the gambler. Know when to hold them, know when to fold them. Really, really important phrase. So think of Kenny Rogers. You got to pivot at the right time. And what you'll find that the best entrepreneurs have done is they have an insane amount of pattern recognition. You're running on reflex in many cases. The more experience you have, the more experience your team has, the better reflexes you have. But you must be decisive. That's the definition of insanity. Doing the same thing over and over again. It's insane to use other people's money to be doing the same thing if it's not working. So you got to get the team in a room and pull that Apollo 13. Throw that equipment down and say, we've got to assemble this. You guys have got 15 minutes to solve this problem and let's get moving with a different plan. That's what entrepreneurship is about more than ever these days, because Moore's Law has taken care of that. Everything's moving at such a faster pace now. It's not about the technology. It's about our agility and our ability to make quick decisions on limited amounts of information. And that's my soliloquy for today. I'm going to close with that and take some questions. And I thank you very much. I hope you've enjoyed it.
Thanks, Peter. We do have a question from Michael on the webcast. Michael writes, if you want to go broad on the market but are focusing on a niche market as an initial target vertical to grow from, how do you get that across to investors without sounding like you don't know who your customer is? So you want to go for a broad market.
Well, I don't know the categories he's talking about, but generically, I think it's a really good question with respect to, I think what you want to do in some ways is if you have a niche opportunity, understand what segments of the market you can get to. When you're talking niche and broad markets, you want to look at things like Jeff Moore, you know, the whole inside the tornado, and look for adjacent categories. You're looking for what we call category, sounds like a consulting term, and it is, category adjacency. Use that with VCs, they'll love that. But the whole notion of where are you going to start and how are you going to own that, or at least get proof of concept and beyond, and get some traction in that area. So, for instance, I have a real interest in getting into healthcare, but boy, if you wanted to see my reaction to winning an account with Baycrest Hospital, now healthcare is getting really interesting. The International Federation on Aging and a hospital in Boston that we're talking to, like really cool stuff. We're starting to build a bit of a bowling alley there. And then it gets really interesting because they want to know who's bought. Well, the minute you start quoting other hospitals, the fear factor goes down. So I think what you need to think about is how could that niche size in and of itself as something like healthcare, a certain area of the healthcare market, but then once you've got that, where else can you go? How do the unique characteristics of that niche carry over in terms of the personas? Remember that word. What other personas do we have in other markets that have the exact same problems? So accounting is similar to legal, but for my product, for instance, I know that if I can get a lot of accounting firms, which I did with KPMG and Deloitte, makes it easier for me to service law firms. So just some thoughts on that.
Thanks. And just cautious that we're a little bit over time. We'll take these two questions and then we'll finish up.
I'll stay after for other questions as well.
While you were speaking, I had what felt like an epiphany, but may have been a brain fart. One of the things
Did you just use the F word in our...
Toronto is very well known for resource development, junior mining companies. And it struck me that the process, the investment process and the whole scenario was extremely similar. Do you think that there's a value in using that local expertise in developing something unknown to be valuable for other areas?
I'm not sure I understand your question. Are you just saying tapping into the people that make the mining sector work from an investment point of view and how they package investments, or?
Well, using them as an example, and possibly even using the people who invest, because they are risk takers by nature.
Yeah, but then again, I'm not an expert on the resource industry, and I'd say the characteristics of a lot of those people are very different. I mean, they're very focused on exploration. It's a bit of a numbers game. There's a lot of data. It's a very interesting market, and there's a certain element of promotion to those stocks, and you know, I'll leave it at that. I think it's a very interesting game and very different from what we're doing in many ways from a technology point of view and the way the markets move with the junior exchanges and stuff. And then there's a lot of government things that we've had over the years to support those markets, like flow-through shares. And again, another thing I won't get into on the podium tonight, but happy to talk with you a bit more. I don't particularly see a great connection there because there's such different areas, but happy to talk about it. Yes?
Yeah, hi, thank you. I actually had two questions, so I guess whatever you have time for. I'm wondering if the pitch, is it any different if you're pitching for like a competition as opposed to an investor?
Funny, I had that discussion just the other day with somebody that had entered the Canada 3.0 in KW. And they were looking for a little bit more. He was thinking that he needed to be more showmanship, more sizzle and stuff. And I don't know why that would be, because it was an investment panel. I think, to answer your question, what I think is very different is that you need to understand that the boardroom is very different than the ballroom. I'm speaking to you as a keynote speaker right now. There's completely different traits that I'm using. If I spoke this way in a boardroom, first of all, if I stood up and I started talking like this in a room full of investors in a boardroom, they'd think I was loopy. So, I mean, straight away, there's an immediate different set of principles at work. So what we're talking about is really a ballroom-style presentation. It's a keynote where you've got a group of, say, 40 people, and you're trying to hold interest and sustain it. So storytelling is actually more important. The graphics are more important. It's less interactive. It's not interactive at all. In fact, you know, for that 12 minutes, you shouldn't be interrupted. You have the floor as a keynote. And then you move to Q&A, similar to what we've done tonight. I think it's very important that you understand that there's more detail that's generally required for an interactive presentation in the boardroom. What's very, very important for you to understand is that you always need lots more slides than what I've shown you tonight, which are really making up your business planning process. And for those interactive discussions, it's always helpful to bring up a slide and say, I'm really glad you asked that, because I have a slide that outlines a lot of our go-to-market strategy and the different stages that we'll do. Oh, product roadmap, yeah, why don't I just bring up and it looks great, because you've got that. So you could even be in a ballroom presentation and somebody asks a question about the revenue model, you have a slide that actually looks at the core assumptions that you walked through in the context of the customer pain that you're measuring. You might have a beautiful graphic or a good spreadsheet on that, and they may want to go into it right there. So you can just call it up. I've never heard anybody say the appendix is too long in a binder. You can go as long as you want on an appendix. It's the chapters, you know, that fundamentally make up the main presentation, where you'll get dinged for being, you know, too much information.
Is there time for the second, or do you want me to ask him?
Go ahead.
With
go
the
ahead.
trends, I feel like it's hard for one person to kind of know what's happening in the political and the cultural and the technology.
What area are you in?
Technology. So I'm wondering
What
if there's
area
an
of technology?
efficient,
Give us a
mobile
pitch.
app.
What's that?
Mobile app.
Mobile.
Yeah.
Okay.
So is there an efficient way to kind of figure out what trends would be relevant in the different spheres?
Yeah, I think, you know, a relevant trend is things like units and what's shipping right now. You know, what are you going to pick as an iOS? Are you going with HTML5? We're doing a mobile application, and you know, it's amazing. 2 years ago, we were actually questioning, should we go on the metal or should we go HTML5? 2 years ago, that was a proper question. What's the answer now? Yeah, do we know that 2 years ago? No. Some people have kind of solved that one, so it's amazing. It's become much simpler. RIM is one of our customers. I love Research in Motion. But the one thing that I've always struggled with from a development point of view is the support of all the different models. It was something that the developer community had a problem with. So take that as one trend. What's going to happen that's going to be in your favor, something like HTML5 is in your favor. Cloud computing is a trend. Is Amazon EC2 going to redefine the cost components of this new venture you've got, where previously 5 years ago it wouldn't have been possible? You know, I have a guy looking at a screen on EC2 right now on a 45-inch TV like this, seeing everything that's happening in our network as people are joining and where we are with, you know, capacity utilization on servers and everything else. You need 10 guys to do that at a previous company I was at, Flow Network. We had the largest cage at UUNet with guys monitoring, you know, in a network operations center. That can be reduced to one guy right now, a really smart guy with a 45-inch TV. We always say he's watching TV. He's doing a lot more than that during the day. So hopefully that's helpful.
Yeah, thank you.
It's one of those very broad questions. It's tough to get into, but listen, I want to make sure everybody gets out on time. We're relatively on time, so I'm happy to stay and answer questions afterwards. And we'll probably be here till 9 o'clock tonight if it's like last year.
So-
Thanks. Hey.
We
Sorry?
have a number of videos
Yeah,
that
yeah.
Peter has, or different topics that Peter has spoken on. If you're interested in hearing some of his marketing videos, send us an email at entrepreneurship101@marsdd.com, and we can send those on as well.